So hello and welcome to our YouTube channel everyone, and today we have a very interesting educational video for all of you. So today we are going to talk about the waves in the market, the different waves in the market. So I hope every one of you might have heard about the trend, the uptrend and the downtrend. The uptrend looks like this. If we say the uptrend looks like this. Okay, now this is an uptrend. Higher high, higher low, higher high, higher low. So this is an uptrend. Similarly, if we see, this is a downtrend. Not perfectly marked, but this is how a downtrend looks like. Lower low, lower high, lower low and lower high. This is how prices moves when they are in trend. Now the wave theory says that the wave theory of Mr. Elliot wave says that prices moves in 5 different ways. The first one is the advancing one, means in that one prices will rise. The second one is also advancing one. It is taking the correction, but it is also the advancing one. The third is also advancing, like that 5 waves are advancing and 3 waves are declining. Like these waves are advancing and these are declining. So there are 5 of these advancing and 3 of these declining waves are there in the market. And every time market moves in this waves only. So this theory mentions that the first cycle of these waves is of 100 of years. That's what we call grand super cycle. Then we have super cycle, then we have cycle, and different level of cycle, starting from 100 of the year as a time zone to a millisecond as its time zone. So what this theory states that you should always identify the trend, the longer trend of the years, of at least a decade's trend. If you see that in the decade trend, if we are in an advancing wave, then you should be long. If not today, then after 10 years or 20 years, you will have good profits under your bag. So as you might have heard people saying that you can go long on Nifty and Sensex stocks and wait for years. Not now, but after 5 years or 10 years from now, you will have good profits. But this is not true, my dear friend, because of 2 reasons. Reason number 1, we might be in a declining wave under the wave theory. And because of that, the markets will fall in the upcoming decade. And because of that, in the 5 and 10 years, you might not be able to earn good profit. And the second reason is that if you are blindly investing in a particular stock without seeing its fundamental, it also might hurt your profits, because a company which lacks in the fundamental and not so sound fundamentally can never give you good returns. It might give you good returns for a month, it might give you good returns for a week, but it will never give you good returns in the long run. And this is a fact which can't be changed. So we need to be very careful about it. Identifying the wave in which we are currently and the fundamental soundness of that particular stock is very important. Let me show you how waves does look like. Let me show you the advancing waves, which are very similar to an uptrend. Let's open the chart of the Asian Pent. Let's move to the weekly charts. Let's see if we can spot a trend on this chart. Look at these waves in the stock price, which are visible and in front of us. Wave 1 advancing. This is not declining wave. This is correcting wave. Again advancing wave. So these 3 will be counted as the advancing one, the 4th advancing, the 5th advancing, and the 6th one will be going down like this from here. So that would be the declining waves. So market always moves in these waves. Whether we are talking, whether we are seeing the price action of 100 years, there will be a cycle. In that particular cycle, these 8 waves will exist. And if we are seeing the cycle of decades, then we will have these waves in decades also. We are seeing yearly, we are seeing monthly, we are seeing weekly, daily, hourly, minute wise or second wise. There will be waves. So if you can identify these two things, then in the longer time frame, we are right now, currently we are at which wave, and second, the fundamental soundness of the particular stock, then we can easily do that. As we have studied before also, when we know the trend of the market, the wave of the market, we have 3 kind of trend in a particular script also: the primary, the intermediate, and the shorter one. The primary one is the overall trend of that stock, that how that the stock is moving in the longer time frame since in existence to till now. Then the intermediate time frame will be of an year or 6 months. Then the shorter one will be of the monthly or the weekly one. We need to identify those trends for a particular script. Similarly, when we are talking about the overall markets, we will have these different cycles from grand super cycle to sub minute, and we have to identify at which wave are we currently on these different cycles. Once we have identified that about the market, we can go long on the stocks which are fundamentally sound. After seeing the final thing is the trend of that particular script. If that script is in the downtrend, fundamentally sound, and its longer term wave is advancing, it is fundamentally sound, but its short term trend is downtrend, then don't take entry. Let that downtrend change into uptrend, then take the entry. This is the right way for the investing. The people, those who invest correctly, those who invest in value, should also look for these super cycles and the trend in that particular stock at the time of investing. So thank you so much for listening this video, guys. I hope you might have increased your knowledge and you might like the video. So if you like the video, please press the like button. Please share this video with your friends and family and make them aware about the wave theory. And don't forget to subscribe our channel. Thank you so much.